Global stock indices are at their highest level since the financial crisis, trading at their best since December 2007. The U.S. economy is warming up after the Federal Reserve Chairwoman Janet Yellen warned that stimulus measures to the world's largest economy are not going to come to a sudden halt. Investors are confident that China will continue to support its economy and that Europe's growth is also on the mend. Luca Rossi reports.
A new dawn for the stock markets and a tangible sign that the world's economy is finally picking up. Global shares are at their highest level since the outbreak of the financial crisis, bolstered by record highs on Wall Street and the improving US economy. The FTSE World Equity Index rose 0.2%, a seventh consecutive day of gains that takes the worldwide benchmark to its highest since December 2007. The mood on Wall Street is positive, and the Federal Reserve Chairwoman Janet Yellen believes that the US job market is still too weak to raise interest rates and drastically reduce the central bank stimulus. In Europe, the deflationary fear still looms, but analysts don't expect the ECB to add further stimulus measures to the economy.
I think you're going to see the ECB say, this is our forward guidance, we told you rates are going to stay on hold for a considerable period. I think there might be a bit of strengthening of that perhaps, trying to talk the exchange rate down a bit, and of course exchange rate's been a large part of the disinflationary forces that we've seen over the past year or so. So it's going to be really all talk, no action.
Investors seem more inclined to put their money into riskier bets. The FTSE Emerging Market Equity Index is up, taking its winning stretch to 9 days. Safe haven assets like US Treasuries and the Japanese yen, which tend to weaken when the market sentiment improves, are softer. Traders are looking carefully towards Japan, where the Nikkei is up, but companies are worried about the impact of the sales tax rising from 5% to 8%. Many experts don't think that the central bank will hit its 2% inflation target next year, but expect it to add more monetary stimulus to the economy.
I think the yen's going to become even more on the defensive because I think the Bank of Japan quite clearly will take a conciliatory tone to the sales tax, particularly given the Tankan numbers. I think therefore that the probabilities increased that we're going to get more QE out of the Bank of Japan at some point later this year.
In China, the Shanghai Composite and the Hong Kong's Hang Seng showed significant gains. That's after an easing of restriction on house ownership gave a lift to the property market. Luca Rossi, Arise News.